Mad Money is a cashier and he receives his first paycheck. He earns $900 for this month and he will have to decide whether he will consume, save, invest, or do a combination of all three. Let's say he decides to celebrate his first paycheck by going to a restaurant with his friends and family. He goes to a fancy restaurant and the bill comes out to be $200. This would be an example of spending our money on services. The next day, Matt decides to buy a new fridge for $600. Since this type of good can last 3 years or more, the fridge would be an example of a durable good. He then decides to go grocery shopping to fill up his new fridge and he ends up spending the remainder of his paycheck. And since groceries don't last 3 years or more, these goods would be considered non-durable. Another option Matt could choose would be to save his $900. Savings occur when current consumption is less than current output or current income. In other words, as long as Matt decides to spend less than his total paycheck, he would be saving some of his money. To save his money, Matt could either keep his money in his wallet or under his bed, or he could also deposit his money in a bank. Let's say he decides to deposit $100 in a bank and the annual interest rate is 0.1%. If he were to withdraw his $100 next year, he will receive $100 with 10 cents, which doesn't seem like a lot, but over time it will accumulate by expanding exponentially. If he decides to keep his $100 under his mattress, it won't go anywhere, but it won't grow either. There is another alternative other than spending or saving Matt's paycheck. This would be to invest that money by buying government bonds, shares in a company, or other assets that will generate revenue over time. For example, he decides to invest all his money in Tesla shares at $150 each. He will buy 6 shares. If Tesla's share price increases to $200 each by the following month, Matt could sell his shares for a total of $1,200, generating $300 in profit. However, if the share price decreases, Matt could potentially lose some, if not all, of his invested money. Therefore, there's generally always a risk in investing because sometimes things just don't yield profit the way you expect it to. In reality, most people do a combination of all three options mentioned before. It really just depends on the person. Some people spend more than they save, others save more than they spend, and some people like to invest their money. The degree of spending, saving, and/or investing depend on certain factors, such as wealth, borrowing, expectations, and real interest rates.